day. This is Peter Knipp from Castlestone Management with comments on the U.S. markets for the week ending January 16th. U.S. stocks struggled for direction as the big banks kicked off the first week of Q4 2025 earnings season. Uncertainty surrounding next Fed chair and geopolitical tensions, both at home and abroad, impacted U.S. markets. For the week, the S&P 500 fell 0.4%, the Nasdaq dropped 0.7%, and the Dow Jones slipped 0.3%. Treasury yields climbed in the week, reaching their highest levels in 4 months. A criminal probe by the Department of Justice into the Fed, employment data suggesting that the labor market may be on more stable ground than thought, and rising geopolitical tensions all helped to lift yields. The benchmark 10-year yield closed the week at 4.22%. The dollar index posted a third consecutive weekly gain as strong U.S. economic data tempered expectations for additional Federal Reserve interest rate cuts. Gold prices remained near record highs and posted a weekly gain as President Trump backed away from earlier threats against Iran, and U.S. economic data remained solid, suggesting interest rates will remain at current levels longer than the market had anticipated. Oil prices hit multi-month highs earlier in the week after protests in Iran and threats of potential military action raised concerns over disruption to the country's crude output. West Texas Intermediate climbed 0.5%, and Brent ended the week 1% higher. Thanks for listening, and thanks for doing business with Castlestone. We'll talk to you soon.